Yes, the month of May is over and now we're coming into June. This is the Daily Stock Market Brief. Today's episode is a monthly and weekly recap. If you're new here, welcome to the channel. Please consider subscribing and hitting that like button. We use technical analysis and intermarket analysis here to get a good idea as to where the market might be headed next. I do these videos Monday through Friday, 5 days a week. We have a lot of charts to go over today. We're going to be going big picture stuff to really get a good idea as to where we stand, so we have that knowledge going into the month of June, okay? And then we're going to hone into some stock market indicators. We're going to be looking at some commodities and bonds and yields as well. With that said, let's go ahead and get into today's episode. All right, welcome back. Now, if you watched my last episode, you would remember this chart. It's the VIX. We were talking about potentially coming in to fill these gaps. We came down towards the end of the day. You can see here we had a pretty big spike. Now, I didn't draw this in. Could be a falling wedge where we're breaking out, but just keep in mind that we have now 1, 2, 3, 4, and if we drill down to the 15-minute time frame, we actually have more than that, gaps above us. So that is kind of the risk factor of things right now as it stands. We can potentially come up to fill those gaps. Now, what I've been saying is you want to make sure to take profits when the VIX gets low, and then you look for some other setups. And when it comes down or gets to these big spike ups, you want to look for areas of opportunity that you can get into. We're going to go ahead and go into the indices, and we're going to start from kind of top down. So we're going to start off with the monthly, and in the conclusion section, I'm going to bring in some quarterly charts to really even give you a broader picture as where we stand in the overall market. So let's start with the monthly time frames. This here is the S&P 500. We're looking at the SPX, and I wanted to call out just a couple of things here. Notice how we're disconnected from the 5 EMA, and we're trading right at around the upper Bollinger Band. Not the greatest looking candle here either. The bears did show some strength, but the bulls did recover. So as it stands right now, we still have the possibility. Now, the 5 EMA is going to be ticking up on the new trading week as it starts. Monday, obviously, is the markets are closed, but the EMA as it stands right now is at 4,002, so we'll get a little bit of an uptick there. Just note that this price action is not the greatest, but it needs to be confirmed that we're going to get some downside pressure before anything. So that's all I see on the S&P 500 on the monthly time frame. Another one is the IWM. We do have a hanging man candle here too as well. It's hard to see, but we did pull back into the 5 EMA, which we were discussing in previous episodes, and we found some strength right there as it retested the channel that it broke out of, as well as the 5 EMA. So we'll continue to see what develops here. Just note, also very frothy there on the RSI as well. When you look at the banks have been just scorching higher and higher, and look where we're trading. We're trading at the very upper range of the Bollinger Band, completely disconnected from the 5 EMA on the monthly time frame as we're getting overbought too as well. A lot of overextensions taking place here on the NASDAQ. We have a little bit of a hanging man candle here as well. You can see that we have reconnected with the 5 EMA and we found some support right there. Price percent oscillator looks like it's slowly kind of rolling itself over, which could mean potentially a loss, continued loss of momentum, and the RSI is overbought. Semiconductors also, the bears really showed some strength, but the bulls stepped it right back up to get us back above that monthly 5 EMA. So semis overall have been looking pretty strong, but it's still trading relatively in a pretty tight range. Price percent oscillator looks like it's starting to kind of roll itself over here, but it's still, on the monthly time frame, this could take some time to fully roll over. And then the RSI as well is very overbought. And if you don't understand most of this, or why I'm pointing out just a few aspects of these monthly charts, is because in the conclusion section, I'll wrap more as to why this is important to know going into the month of June, because it helps kind of determine what your best practices should be as you're approaching the markets in the summer months. Industrials as well, trading right at the upper range of the Bollinger Band, so it's pretty overextended there and disconnected completely from the 5 EMA for the second month there in a row. Transports, just a vertical move to the upside, very overbought. We were calling this out previously, very overextended, and then the bears stepped in slightly towards the end of the month there, and we're, just a slight upper wick. Just very overextended, and this is now the second month completely disconnected from the 5 monthly EMA too as well. So just overextension, a lot of overextensions. Oops, didn't mean to go to that one. Then I want to also call out the German DAX. The German DAX did close at a monthly all-time high right here. You can see it pulled back into the 5 EMA, found some support, missed it by a few, but we are trading right there at the upper range of the Bollinger Band. Now let's go ahead and drill into the weekly time frames. We're still technically within this chart pattern right here. You can see that the bears stepped up these previous 2 weeks, but we did find some strength today. Finished slightly up on the week, 1.16% for the S&P 500. Still within this technical pattern, as well as within this and the VXX, this tight wedge right there. And we'll bring up the VIX here momentarily. The IWM also finished up slightly for the week, up 2.51%, so pretty darn strong week for the small caps. I still want to call out that we're still technically within this RVX falling wedge here, and we're still within this pennant pattern. Another thing I want to call out is the contraction that we're seeing within the Bollinger Bands, something that I'm going to be paying close attention to. Typically, when you get these Bollinger Band squeezes, they contract very tightly, but then expand in either direction. So are the small caps going to make a continuation move? That would be, the ideal thing because the bulls currently have the momentum. However, we got to play it as we see the price action. If they do break out to the upside, you'd want to see this crack lower, the RVX, because what I do find interesting is that the IWM is trading at these highs right here, and yet we have the volatility index for the Russell here still relatively very high comparably to where it's been in the past. The Dow Jones Industrials on the weekly time frame, not much to report here. I just wanted to call out the price percent oscillator. Looks like it's about to start doing a bearish crossover. If not, it actually just did, and we could hardly see it. So let me see here. The black line there is at 40.2 and 4.201, and then the purple line is at 4.205. So technically that is a bearish crossover as it stands right now. The black line is crossing through the other line there. So we'll continue to see what develops, but overall, the 5 EMA on the weekly time frame, the bulls do have control. On the Qs here, very similar type patterns, right? We have the falling wedges in the volatility, but we have the rising wedges there in the NASDAQ, or the Qs, sorry. And as it stands this week, up 2.12%. So we saw a good week there in the Qs, and we recovered the 5 EMA2 as well. Nothing has been broken. This does say to me that we can reach higher within this and tap it a third time. That means it's an accurate trend line. If it's tested 3 times, it's something that we need to pay very close attention to. So as I see it stand, this is still not the greatest looking pattern here, and neither is this. But we just got to play it as time continues, right? So the weekly time frames are important to look at from a longer term perspective, and we want to just make sure that we're monitoring that. As far as the German DAX goes, up slightly for the week, basically 0.5% here. Really going sideways. You can see these long lower wicks on these hammer candles. So these last 3 weeks, look at how small range these bodies are. Just a lot of indecision, debating whether, hey, are we going to continue to press higher or not? You got to give it to the bulls though, because they managed to hold up that 5 EMA as 1, 2, 3, 4, 5 weeks. As it crossed there below it, and then they recovered it. Price percent oscillator does look like it's also about to do a bearish crossover, but it's not quite there yet. Let's look at the daily time frame. Daily time frames on the S&P 500, we had a bullish crossover on the price percent oscillator. That is good, but the last 4 trading days, this last week has been really, really flat. Got to give it in the bulls' favor as of right now. We're above the upsloping 5 EMA. We're above the 20, 50, 100, and 200-day moving averages. But overall, we're really trading within this tight range. Now, what's important to note is if we get a breakout really quickly, starting into the next trading week, above this 4,250 level, you got to be a little hesitant given the context of the monthly charts and where it's came from this 50-day moving average. It's been a very undisruptive run this last 1, 2, 3, 4, 5, 6, 7, 8 trading days. So you want to see it take a little bit of a breather before really just making this, just strong move through the upside. So something to consider, if that were to happen. The IWM, I'm still watching this potential topping pattern, potentially a symmetrical triangle right here. You can see it was a decent day, couple of days here as it's bounced off the 100-day moving average. We're pulling up to a previous area where there's quite a bit of supply. So it's nothing to get too excited about at this particular point in time. I don't see a trade here as it stands. However, if we do start breaking above this supply zone right up here, it does seem to me that we can continue to press higher. Price percent oscillator is bullish, but we are still not fully above 0 there. So we'll continue to monitor what plays out there. Here's the Qs on the daily time frame. You can see here these last 4 or 5 trading days, a lot of indecision, a lot of sideways movement, and we moved into this 3-day weekend. So it seems to me like a lot of people just kind of pulled their foot off the gas a little bit. wait for the weekend and kind of play it from there. Overall, though, still in bullish context, upsloping 5 EMA. We have the 50 period sloping nicely up, but the 20 period is below it. So what you'd like to see if you are a bull is to see the price potentially pull back slightly a little bit more and then head higher to the point where the 20 period moving average on the daily time frame can turn itself back up through the 50-day moving average. So still some price action needs to get resolved, as you can see there. The semiconductors also been seeing a lot of strength, and we saw a lot of strength this last trading day. However, just take note, the 20 period has crossed below the 50 and the 100. So what you would want to see here after this big run up from 225 to 250, you want to see these take a little bit of a break. And the reason why is just simply because it doesn't make sense from a risk versus reward standpoint to hop in a trade as we're moving into this supply zone. As you can see, as resistance. If we break out of it without taking any sort of back test, I'd be very careful entering into a position like that because it could result in a false breakout. Then it all of a sudden, maybe you get a 50% decline from its previous move, from 225. I'm not saying 50% from 250. And then takes a little bit of a breather. It still has some work to do to get its trend back up and moving. This could be a long-term consolidation. I would not be surprised to see this thing consolidate for a few more months. So we'll see what the semiconductors decide to do. Industrials right here as well. The Dow Jones Industrials, not much going on. You can see slightly up on the previous trading day. Price percent oscillator looks like it wants to cross over to bullish. Like it's in the bull's favor. So, any positions that you're looking at, make sure that you're considering from the long perspective. There will be some good short setups, I'm sure of that. But as it stands right now, the 5 EMA is sloping up, the 20 period is relatively flat, but the overall context of the chart still remains to be very bullish. On the German DAX, you can see here, this is very interesting. We had a closing high, all-time high for the German DAX. You can see just looking back. Now, the reason why I'm pointing this out is because the German DAX typically has a pretty strong correlation to the United States markets, and what we're seeing here is an all-time closing high. So it could be foreshadowing potentially that we might see a new high coming soon for the various US indices. So we'll see what takes place there. Let's drill down to some 15-minute time frames. First off, SPY type, it's still within this tight channel, potential of a rising wedge here where we can crack down and retest this 417.50 level. We have a little supply zone up above us. So, really just channel bound as it stands. The Qs also channel bound. We called out, it looked like it really wanted to break out here. It broke out. Then we said, okay, well now the question is, whether or not if it's going to hold, as we were watching the various volatility indexes reaching down to lows and bumping into an area of support. They started bouncing, and what do you know? It came back within this channel. So we'll continue to monitor this channel as it stands right here. IWM, Russell 2000, I'm looking at 225. You can see it's gapped up and it's been ramping. It's been holding this little zone of support here, and you can see it's been building some volume right in that area. So if we crack down, I think we go fill this gap and potentially retest 223. DIA also rising wedge right here. So I'm going to continue to monitor this one. We have some overhead resistance at 347, and we have some support down here where the gap is at 344. Now, this is the DIA. This is the Dow Jones Industrial ETF. So just, a lot of noise right now, a lot of nothing these last 4 or 5 trading days. So I hope you're starting to understand context from a bigger perspective. And then as we drill down, really try to get a good idea as to where, the next trade might be. Let's hop into some stock market indicators. We're going to start off with the NIM. What are asset managers doing? Look at this. Saw that uptick up to 68.3. So, it's nothing too crazy, nothing overextended by any means, but we did see an uptick there, giving a little bit more strength in the bullish direction. As far as the RIDEX goes, RIDEX did go down a little bit, which also means, well, technically up, means it's a little bit more bullish there too, as well as the week progressed. So we'll continue to monitor and see what develops here. When it gets above 100, that typically means that asset managers are now using leverage. So it can get above 100. It has before. There, as it stands right now, it's just not much to report on other than just a little bit of an uptick. So a little bit of bullish confidence coming in there. VIX, the volatility index on the weekly time frame, you can see a big crush to the downside this last week, down 16.82%. Still within this falling wedge technical pattern. If it comes down a little bit lower, that'd be pretty insane. We can potentially reach down to around 18 to slightly below. That would bring the markets up higher. I'd be very cautious if it were to come up into that range. The BPINDU chart here is getting pretty frothy as well. Now it can stay overextended for quite some time, but from a contrarian standpoint, you can see here 85%, almost 85% of the stocks are on buy signals in the Dow Jones Industrials based off of point and figure charts, and you can see the RSI is getting pretty overbought too as well. So it's not the greatest time to go long as we're seeing these monthly overextensions. However, like I said, things can stay overextended for quite some time. The lumber to gold ratio developed by Michael Guyad, we did see a downtick here as lumber went down around 10% for the month, and then we've seen an uptick there in the price of gold. We'll be going over gold here in the commodities section. Still in a risk-on environment, but as it's pointing down, it does seem like we could potentially, drag lower if lumber continues to see some sort of drag. As it stands right now, we were trying to see if potentially it would continue throughout the week. It did continue out the week, so let's see here coming into next week what lumber decides to do as well. XLU over SPY, part of his beta rotation strategy. Utilities relative performance did not do too well, so utilities, although they did good on Friday, still in a risk-on environment as it stands. The next ratio is the Bitcoin to gold ratio, and I like looking at this one. This was more of it started off as a joke, but then ended up becoming pretty legitimate as I was looking through history. This, we called it the sailor to shift rotation strategy. And what I want to call out here is simply that the rate of change between Bitcoin and gold is at a very, very low reading. It's only been there 4 times throughout, I guess, up to 2014. I can't go back any further on stockcharts.com. However, what I want to say is that when it reached down to these low levels, we've seen some pretty significant bounces, 176%. This was like 40 or something like that, and this was like over 100% too as well. And you can see we're pulling back down into that area. So it's something to consider. Nothing that I'm putting too much weight on, but I did say there on Twitter, if you don't follow me there, you can follow me, that if we get some strong undercuts of these previous lows, I'm planning on potentially just scaling into a small position to see if we can get a bounce from that level. So keep an eye out for that. As far as the NI high low goes, I want to call out here, we did see an uptick in the NI high low through the 20 period moving average. That is bullish. So perhaps that's the start of a stronger leg there in the NYSE. We will see. It is clearly above 50. It's in bullish context. That was a bullish crossover right here. That's what you want to see, but we'll see if it continues. NYMO still holding a negative divergence as it stands. Breadth is not really quite there, but perhaps going into next week, we might see a big boost up breaking out of this little trend line. Keep an eye out that, minus 60 or 60 plus here to 80. Those are overbought readings. And then we have down here right around minus 80 to, or minus 60 to minus 80. That's typically a good opportunity to catch some dips. And you can see here we've had dips, bam, bam. You can see those are some pretty significant dips. So it's always a good idea to pay attention to the NYMO. As far as a percent of stocks in the S&P 500 that are above the 50-day moving average, helps us see breadth here. Still diverging. You can see the market has been pressing slightly higher here. It still has not an all-time high, but you can see the internals, has still been kind of dragging a little bit lower. We did see a little bit of an uptick, but it's still diverging. So if the market continues to press higher, you'd want to see the percent of stocks above the 50-day moving average start cranking up there too as well. And then this is the Cohen high-low. This has been really accurate for finding some bottoms, both from a very overextended portion, but then right here at around 0.5, we called out boom, boom, these two right here, and then we call it right here where it found the bottom and then was pulling back down, and it did find a temporary bottom there too as well. So perhaps if we start cracking through that, it might bring some more downwards pressure, but as it stands right now, everything looks completely fine. Let's hop into commodities. Daily time frame for gold. We are moving into that 26th day here soon, and we're overbought, so perhaps that ends up being a turning point where we potentially take a little bit of a breather because it has been getting overextended. Price percent oscillator looks like it's slowly losing momentum too as well, but we'll continue to monitor and just see what develops there. We're going to talk about the dollar here shortly. Gold from a weekly perspective, very nice breakout of this flag back above that 38.2 retracement level, and then also the price percent oscillator looks really bullish here too. So just a very strong move from 1700 straight up there, but like I said, it's due for a little bit of a breather. And then a monthly time frame, cup and handle, this little flag right here, we did up 7.8% for the month. Very good month, and a nice breakout of this pattern, disconnected from the 5 EMA. So perhaps we come and retest the 5 EMA. The 5 EMA is at 18.19. It's probably going to uptick, obviously, just a little bit going into the next month. Silver still holding very strong within this cupping pattern. got overhead resistance right at around 29 to 30. This zone up here looks like it wants to start breaking out as we have the price percent oscillator crossing over. We'll continue to see what happens with silver. Oil also 67.5 still tends to be that strong area of resistance. The week closed up 4.31%. Looks like it wants to start trying to take for that breakout, but it's not quite there yet as well. This should be very good for energy stocks if we start seeing a breakout there. CRB index also found a nice strong move up 2.4% for the week. It's still pretty darn overextended from a relative standpoint. From a RSI standpoint, price percent oscillator is kind of flat here. We'll see we'll see what the follow through is on any of this. I wouldn't be surprised to still see it consolidate or take a little bit of a breather, but I'm ready for if the price action decides to go up further. Bitcoin has been having just a rough time as it's broken down through these key levels. All the moving averages are starting to cross through one another. The 50 through the 100, the 20 through the 100, and the 20 is trying to come back down here to the 200. So the trend has been broken. This is something to pay very close attention to. It's going to be a lot of work for this to repair. This is not something that where you just get some strong shoot right back up to the all-time highs. It does take time to repair this type of stuff, and it seems like the environment where you'd want to try to tactfully play bounces and then see, perhaps if we do get continued strength. But as it stands right now, I'm looking for an undercut of 30,000. If we get an undercut with some force, that might be the time where I take a small little position and then see if we can catch a little run up. But you can see here, we broke through this, we cracked through the 200-day, we retested that, so that 200-day now has been proven to act as a level of resistance. The more we trade underneath it, the stronger this trend starts to roll itself over. So a lot of time to repair these type of things. It's not, like I said, some sort of overnight it's not some overnight miracle that can take place. It's always possible, but just note that there's a lot of trap supply up in here, a lot. So we'll continue to just monitor that and develop it. And if you, like I said, if you don't follow me on Twitter, you can follow me there, because I'll probably end up posting when I get in, or just into my Patreon group. I'll probably post there first. That's where I post all my trade alerts. Now let's quickly look at the dollar. The dollar is still, it had a bad month, which typically from a seasonality perspective, it typically has a good month in May. It did not have a good month in May. So in my first kind of the video that I talked about, where I see the month of May, I thought the dollar would go up and it would bring pressure into the equity markets, but it did not, as the markets relatively were flat. However, I will show you the daily time frame here in a moment, but what I want to call out here is there's resistance, support, and there's still support here. So it's not just, this is hard to break, right? This 88, 50-ish level right around here. I think that if we start getting a couple of days daily closes below that, then that might be the breaking point where we head lower, and there's really nothing going on here all the way down to around 84. And that's a big drop, which can bring up gold even stronger. It can bring up certain assets, certain markets even stronger too as well, including Bitcoin, as we've seen the correlation. So from a monthly perspective, we're below the 5 EMA, that's down sloping, and the 20 period moving average is also down sloping there too as well. So not looking great for the dollar. However, on the daily time frame, I want to call out this correlation and something that I've been kind of talking about here, because I think we might still see weakness into the early parts of June and then see it perhaps ramp up. And that means that the dollar would go higher, as we seen the previous trading day. It was a breakout candle, but then quickly got reversed right back into the trend line. So very interesting price action. And what we're seeing here on the S&P 500, it cracked through that rising wedge. We said that potentially can come up to back test further, but if the dollar starts breaking out, it might apply pressure on the S&P 500 to potentially come back in to test this 4,050 level, which would make sense to me. That's the level that I've been keeping an eye on. And then perhaps set up for a summer rally there in the middle of June. Let's look at bonds and yields. As far as the TNX, the 10-year Treasury goes, down slightly on the previous trading day, still within a tight range. So, not much to report here. It is below the 50-day and the 20-day moving averages. From a monthly perspective, really just range bound here. You can see we shot straight up, and we've been kind of consolidating here. We pulled back into the 5 EMA, found some support there. We have a lot of resistance up ahead at around 20 to 22. So that means, 2% 10-year yield and 2.2. I think it can go technically a little bit lower to around 1.9. And this could be potentially flagging where we break out. Now, I did see somebody post saying because the rates are so low right now and they were significantly higher in 2000, we shouldn't have to worry as much where tech can do really well. Well, there's a big difference between now and what it was in the dot-com bust. The difference being, yes, the interest rates are significantly lower. However, the debt load is significantly different as well. So what's important to pay attention to in the 10-year is one, to think about when debt will actually matter, and then two, the rate of change of these specific rates. So if we get a forceful move to the upside, that is going to present damage, and we've already seen that damage take place in tech when we got that forceful move. So I'm just ranting right there. The TLH, this is forming, a bottoming type pattern right here. So we'll see if this wants to continue. The overhead resistance is still right around 144, and that's, on a downsloping 200-day and 100-day moving average, but it is starting to base out here. And if we start breaking out, that's more of a risk off type move, right? More people come into treasury bonds for protection versus, these high, like certain equities. And also, we're starting to see, like I've been pointing out on a relative rotation graph, we're starting to see utilities strengthen too very slowly from a weekly perspective, as well as consumer staples. From a monthly perspective, you can see here we came up, very overbought, and now we pulled back down into this support zone where we had this upper wick here and this resistance right up in here. And once resistance is broken, it can act as support as we're floating right around these ranges on the 50-period monthly moving average. So overall, pretty nasty pullback, downsloping 5 monthly EMA too as well, but it is finding some support in this zone, so we'll continue to see what develops there. All right, everybody, now it's time to really wrap everything together, put a bow on it, and kind of give you an idea as to what I expect to take place in June. So coming into the early months, there's a couple things that I personally think potentially could happen. I think that in the early couple of days of June to a week to 2 weeks, we might see that dollar strength. Okay, the dollar is sitting right at a key level of support. It's in a falling wedge, as we've already previously stated. Let me bring that back up. If we see some strength there, I think that's gonna be where gold takes a little bit of a breather, and perhaps the equity markets as well. Okay, so that's the first thing going into the early part of June. However, what I want to call out here, that it may or may not happen. So I want to point out some charts to give you an idea even more so as where we stand from the overall picture. This is important to note because when you're taking trades, you need to understand the big picture as where we are from an overall standpoint. And to do that, you need to look at some quarterly charts and monthly charts. We showed you the monthly, but look at this. We're clear above the upper monthly Bollinger Bands in the S&P 500 and disconnected from a frequently tagged moving average, the 5 EMA on a quarterly basis, and we're overbought. Okay, so you're trading at these all-time highs. Now, the quarter is not over by any means. We have one more month, right? January, February, March, first quarter. April, May, June, second quarter. So we have June to go, and that could change. We could have an inverted hammer here. We don't know, or it could press even higher and, get us even further outside of these bands. And, where's the 5 EMA stand? It's at 3751. So I would say, hey, if we start getting some scare, some fright in the markets, look at the S&P 500 on a quarterly, look at the S&P 500 and start paying very close attention to that the quarterly EMA at 3751, and then also on the monthly time frame as well, which is right around the 4,000. So just note, okay, we're taking trades at these just very, very overextend readings. But that's not just with that. Look at the NYSE, trading above the upper Bollinger Band, disconnected from the 5 EMA. The NDX trading, super throughout the RSI on a quarterly basis. 5 EMA completely disconnected from it, and we're right at that upper range of the quarterly upper Bollinger Band too as well. The Dow Jones Industrial, same story goes. Overextended, overbought there on the RSI, disconnected from the 5 EMA, trading right at around the upper Bollinger Band too as well. The transports, the very same thing. Look at this move. 1, 2, 3, 4, 5 straight months that just went completely vertical, and you can see the range of the candles slow down. As of right now, the quarter's not over, but we're actually now coming to look at, okay, this is crazy. I just noticed this. So the low is 14,617. The upper Bollinger Band, 14,346. So the low, oh my gosh. That's how crazy this is. Oh my gosh. Holy moly. We aren't even in the Bollinger Bands. What the heck? Okay, I don't know how I didn't just notice that up until this point. We are not even in the Bollinger Band. That is overextended. That is crazy. Talk about market distortion. Am I reading this right? Is this wrong? The upper Bollinger Band is at 14,346. The low of this candle is at 14,617. Yeah, we are outside completely on a quarterly basis of the upper. I honestly do not think that that's ever happened. I'd have to look back in history, but that is crazy. Holy moly. Yeah, that's not going to end in disaster at all. Jeez, that is bonkers. The DJW, oh my, I cannot believe that. That's so crazy to me. A DJW also trading outside the upper Bollinger Band, disconnected from the 5 EMA, and then the IWM putting in, if it keeps continuing to press higher, it's going to be a hanging man candle, disconnected from the 5 EMA, and look at this. Oh my gosh, I didn't even notice. I can't, how did I not notice this before coming on here? Look at the lower wick. The lower wick acted as support on the upper Bollinger Band. So we are completely outside of the upper Bollinger Band, and the upper Bollinger Band acted as a level of support. What world do we live in? Absolutely crazy. Okay, so let me reiterate my thoughts here. Understand that even if there's opportunities from the long perspective, look at where we're trading. It's crazy. It's absolutely bonkers. So you need to be very careful. Going into the month of June, we may see an early pullback. It would be healthy to see that. You want to play into some of that to hedge along, even though we are just in some crazy ranges here, right? But bubbles can be crazy. They can go bigger and bigger and bigger and bigger. You just need to be prepared for if they go pop. That's all I got for you on today's episode, everybody. Have a wonderful day.